Welcome back to Breaking Banks, the #1 global fintech and banking podcast and radio show. This week, we got something really special for you. Of course, I am your host of Breaking Banks, but we also have here two other great hosts. I'll let you guys introduce yourselves.
Yeah, so I'm Dave Wallace from the #1 fintech podcast, Dave and Dharm Demystify. Yeah, that's me, Dharmesh.
I am the other half of Dave and Dharm Demystify podcast, Dharmesh Mistry. It's a pleasure to be here.
That's great. You know, we like to do these mashups, right? So this is a double branded podcast, and we're gonna get into some interesting debates that we've been having a bit online, and sort of bring that into the public sphere. How long have you guys been going with your podcast now?
So it's about 4 years now.
That's fantastic.
So we're over 100 episodes. And yeah, we just had a lot of fun doing it. And met some incredible people along the way. Yeah, and I just think it's sort of really helped us in terms of having a sort of, I think, well thought through point of view on the marketplace. So I think, one of the things we started to do is started branching out into other places. So we sort of are starting to appear on places like TikTok. And I think TikTok is where you and
we got into it.
yeah, we got into it because we had a bit of a debate on the how long fintech had been going. So it's kind of interesting. I think that TikTok seems to be a channel that more and more people are kind of engaging with, particularly around the topic of fintech.
So Dharmesh, I mean, why don't you take us through your position that you put out on TikTok, which is what got my response, and then I can talk about why I think the definition is a bit fungible.
Look, yes, so the question was, what is fintech? And my response was really basically that fintech is a movement of a financial product, or it's a creation of a financial product that's purely technology enabled, right? And so, these days we might think, well, that's actually an account. An account is, a fintech solution. Well, not really, because accounts were possible on pieces of paper. Because before I got involved in, I guess, the technology side, then yeah, pretty much a long time ago, banks had paper ledgers, and that's how they were created. Off the back of that, they had loans, etc., etc. So a lot of the products could be facilitated in a manual way. My definition is very specific to the internet. It's using the internet to create and distribute financial products.
Okay, so that, I think that position is slightly different from the way I recall it, but
Okay.
I'll give you my position, and we're probably more aligned on this than I expected. But the first, again, I've done some research on this. The first appearance of the word fintech in the modern press was in the early 1990s. I don't have the guy's name, the journalist's name now, but Liz Lumley, who obviously I've known for many years, now works with the banker in London. I'm sure you guys know her. Liz talked about the fact that this journalist sort of called that out. But having said that, the word fintech wasn't in the common vernacular until 2012. And if you do Google Trends search, for example, there was just no activity search on fintech before 2012, just a spattering. But then it shoots up and goes radically ahead. Now, what the industry tries to do, excuse me, what the industry tries to do is take certain infrastructure companies like Visa and MasterCard and so forth and position them as fintech companies. And in those earliest definitions of what the industry called fintech, then that's fine. But this is not how people talk about fintech today. So if you're talking about, if I ask someone in the UK who's aligned with the industry, give me the name of the top 5 fintechs that you know in the world, Visa and MasterCard would not be among them, right? Because that's not how we use the word fintech today. Of course, if you were to put Visa particularly in the rankings of fintechs using the older definition, then they would be one of the largest fintechs in the world today. Not as big as some of the fintechs that we have, like Alipay and so forth, but still up there. But I think when you look at it as a sector now and how the industry analyzes it as a sector, they're generally using that definition you've talked about, which is internet-based organizations that deliver their business and
Well,
deliver
hang on,
scale through that.
it's not just the internet-based businesses. Like I sort of feel like Dharmesh and I, end of the 90s, we were working with companies like Brocat, who were solving specific problems.
Is that how we first met, through Brocat?
Well, I don't think so. No, we met through HSBC.
No, we met through HSBC, right? But
yeah, so
man, I my first gig in Hong Kong was working for Brocat.
wow.
No, wow.
That's insane. Sorry,
Well,
folks.
look, I mean,
We're just
it's good
reminiscing
then. So
here on
you
the show.
understand. So Brocat were a business who were solving a very particular problem around encryption, but primarily for the banking industry. Now, I would argue that they were very much a fintech company, and so what they were doing, very internet related. But then we were then working with people like Cooperative Bank on launching Smile, the Woolwich Open Plan Services. So these were sort of traditional banks, but they were delivering kind of new propositions. And I think those were very much fintech propositions because, like as Dharmesh says, there's
especially I think if they change the customer experience, as you say, if they moved the technology of the industry forward, I'm prepared. I'm happy to make that concession, right? And it's not that that definition isn't correct, Dave. It's just sort of more the industry term and how that's used today. So technically, yeah, you're correct. But if I was to talk to a VC about their fintech investments, they're going to be identifying these highly scalable, they want 20x multiple, things like this type things, or next generation infrastructure and things like that. Now it would have to include artificial intelligence in the definition, as well as obviously internet-based companies. And AI companies may train data, using the internet, for example, but they're not necessarily internet companies. So, already I think that definition is sort of going to be morphing anyway. But I don't know if it matters. In 10 years, we're not going to use the term fintech again, right? Because you're not going to call Revolut, a fintech bank. It's just going to be a bank.
Yeah, it's interesting because there's a bunch of people just saying fintech is an irrelevant term now.
Yeah, I think that's fair.
I think just going back to the Brocat point quickly, Dave, is that they were very much a technology company. They didn't actually have a financial product. And so, the differentiation I'd make further is that there has to be a financial product as part of the proposition. So it's either it is a internet, delivered account, loan, buy now, pay later capability, etc. It's not an ATM. It's not a POS terminal.
It's not telephone banking. Yeah.
It's not telephone banking. Yeah, I mean,
so it is a class of it's a class of technology, right?
Yeah, but it's a class of financial product delivered through the internet. That's my definition.
Okay. All right. Well,
otherwise it's too broad. We get a load of
if you're listening to this debate, then tell us what you think the definition is. So on LinkedIn or X or whatever platform you use, and just link to the podcasts. There, I know for us it's Provokecast on Insta and on Twitter. On LinkedIn, of course, you can find it as Provoke Media or Breaking Banks Podcast. What about you guys?
So the best place to find us is Dave and Dharm Demystify on LinkedIn. So that's our hub at the moment.
Cool.
Awesome.
Well, I've got a question, right? So
hit me.
In the future, if financial services is not only driven by just technology, but it's driven by AI. So fundamentally, decisions aren't, coded anymore.
Mm.
They're not parameterized as such. Then, decisions are made through an analysis of data and interpreted into a result. So
Yeah.
they're AI driven. Will
Yep.
we have some new terminology like fintech to say, oh, these businesses are AI businesses?
So I think the way I think about it today is we will define economies based on their level of artificial intelligence in the economy. So a economy with a high level or high degree of automation or semi-autonomous industry will be known as a smart economy. And this will be next generation smart infrastructure to run that economy. So in the banking space, as we talk about that, one of the biggest changes, potentially the biggest element of where banking meets AI in the smart economy is agency-based payments and smart contracts that run those agency-based payments. So AI agents that can execute payments on your behalf. So you're not having to enter an app and punch in, I can say to my AI, I'll send Dave that £50 I owe him, and bang, it does it from that sort of a prompt. Or I can build a business relationship between two, legal entities, corporations that are AI run, and we can implement a smart contract in terms of how, each party gets paid or treated in that process. And that would be automated infrastructure, et cetera, right? The heavy personalization of, individual interactions with your bank and with your money, and indeed on things like healthcare data and so forth, all of those aspects. So in that light, then, you have to understand that banks in the future have to fill this role of automating those smart elements of society that are going to bring those efficiency gains and productivity gains that we're going to need. Plus, some elements of supporting, some of the transformations, around climate and so forth. Certainly in terms of portfolio and so forth. But
So will we start talking about smart finance companies
yeah,
instead of fintechs? Is that
yeah, I
really?
think so. Smart banks, smart infrastructure. I think that's probably the way we'll term it. And if you think about it, there's almost nothing in a bank today that could not be automated, right? Using this type of technology. So if I just take the definition of what a bank is, in 20 years' time, then if you are going to try to launch a bank and you're going to the regulator to get a banking license, the banking license would define you as a technology company that's part of national financial infrastructure using artificial intelligence. Not the way we think about it today. Your asset size, your ROE, none of that is going to matter in
So,
that world of the future.
I mean, it's fascinating, isn't it? Because banks will change and the consumer's going to change, and
Yeah.
like how much of what we do now is relevant to banking in 10 years' time? So here, I've got an article being published tomorrow, and it's about kind of the credit, people dropping out of the credit sort of industry because they don't have credit history, because
Mm.
our kids are staying at home, they're not getting credit cards, they're not doing all the things that we kind of used to do. But the question posed at the end of it is, in a world where you have AI agents which are sort of interceding on a customer's behalf in terms of their finances, where does the credit score lie with the
Mm.
individual or the agent? So if it's with the
Yeah.
agent, and you go, well, the whole credit industry is kind of not fit for purpose for this future.
No, it isn't. And it's all going to have to be contextual, and it's going to be based on behavioral elements and cash flow. It's going to be based on data. We are already seeing some of this. So I'll give you one example. 40% of the SME lending market in China is run by Alipay and MyBank, right? So they own 40% market share. Their NPL ratios, I think in 2022, they lent to 54 million companies. Their NPL ratios are half that of ICBC, Bank of Communications, Agricultural Bank, and so forth, right? The biggest guys, they're half. And there's two elements as to why that is. One is obviously algorithmic capability in their tech stack, and their ability to get data, their ability to manage engagement and relationships. That's all there. But it's a really key part of it is the cash flow data they get from Alibaba merchants, right? Because that gives them, so very, very good modeling. And, if you've got a traditional bank still asking for 3 years of financial statements, they just won't be able to compete with that type of smart infrastructure. It's like they can't compete. We used to think that traditional banks would be better at managing risk than the new entrants. This was something that the industry said, oh, you know what, they might be able to make nice apps and be good at, getting people online, but they'll never be good at managing credit risk as we will. They'll never be they'll never be profitable, right? And the only reason they're growing at the rate they are is because how small they are. We now know all of that is false, right? And that credit risk management is a key data thing. So yeah, it's from a credit perspective, it's going to be data driven. It's going to be contextually driven. If you're still thinking in the base, like credit cards, well, in 10 years, most people won't use a plastic card at all. Certainly, you can't have even if you try to replicate a credit card product in a wallet, there's much better ways to deliver the benefits you get from a credit card, rather than having actual credit card product. And how many banks are ready to sunset credit cards?
Yeah, not many. But I think there's also a different problem here that the banks face, and that is their traditional segmentation model is based around a geographic reach. So, in the past, it was serviced through branches and then maybe call centers and now the internet, etc. But fundamentally, they're still targeting customers on a basis of, their mass market. Now, if we go back to that SME thing, most of the big banks will have 2,000-3,000 barbershops. They'll have 2,000-3,000 hairdressers, 2,000-3,000 butchers, bakers, etc. Each of these lines of business are very different. But when they do their credit risk, they treat them as an SME, and it's a macro picture of all types of businesses. It's not specific to your line of business.
Right.
So the difference with the likes of people like Alipay is their finer segmentation allows them to analyze individual lines of businesses better than traditional banks do today. I mean, there is fundamentally no reason why a bank couldn't do that today, with the existing data lakes, and maybe some of their technology is a little bit old hat, but they could easily shift the data to a better warehouse technology or whatever. But the thinking around re-looking at how to do business is the thing I think that holds them back and keeps them back in their legacy way of servicing the SME market.
Yeah. I mean, I think if you look at where SMEs need help, so one of the key areas for them is going to just be simplifying banking. So think about an AI-based bank for business as a platform for SMEs, and you log in, and instead of just seeing your balance sheet, your account statement, you're actually now seeing your accounts that are processed in real time using artificial intelligence. Your tax is automatically done, et cetera, et cetera. This is not impossible. Even with the current technology today, we could probably deliver that experience for SMEs. So, the ability for banks to extend to become a platform for business, that is obviously a really exciting opportunity, but you're not going to run AI-based smart contracts on current core systems. So it's all net new technical stack capability. And that's the real question. Are any banks there yet? The only two banks in the world right now that are working on this from a platform perspective, JPMorgan Chase and ICBC. They're the only two that I know of, right? And that's crazy. I mean, in terms of post-quantum encryption, no bank I know is working on this. So
Okay.
JPMorgan again, they're working on it. But
Yeah.
you know, it's like that. You know, I don't just see. I don't look. How is it? This is what I was talking to you guys about before the show in terms of, you know, who's going to make it through this and who's going to be part of that smart infrastructure as AI based banks. Well, if I ask you today, which of your, you know, your current banks in the UK most likely to be, you know, early in on integrating artificial intelligence into the, you know, generative banking experience type thing? Who do you think?
I would say it's going to be a Revolut or a Monzo. So
Exactly.
Yeah.
Exactly, because their tech stack is going to allow them to adapt to that much faster and easier. And you've got the legacy infrastructure thing that is always going to be a problem. And you can't that's like the real thing is, you know, none of the traditional players could become a truly digital bank without essentially sort of like replacing everything, you know. And I just don't see anyone willing to go to that level of transformation right now in the traditional space. It's still augmentation. They're trying to copy, you know, trying to put a new experience layer, for example, on top of you know, their existing tech to sort of mimic what, say, a Revolut or Monzo's doing, right?
So do you not think though that the legacy banks will become increasingly manufacturers of products, and they'll not worry too much about the distribution? So one of the
Mm.
paths that they could take is like, let somebody else handle kind of the customer experience, and but what we will handle is the product definition. You know, if you're going to be a smart business, you need to have scale, and you know, I would say the technology in order to be able to kind of do, and I would question whether some of the neobanks have that scale at the moment in order to be able to do that. So, you know, I guess the point is if I was at HSBC, then now is the moment I might be saying, well, look, our strategy in the future is going to be about manufacture. And, you know, to your point around
Yeah.
changing cores, and I don't think they need to change their cores. They just need to find technology which they can sort of wrap their cores around, which will enable them to get there. But I don't think that the big banks are going to disappear. They're just going to change what they do and how they do it, is my view.
I mean,
Yeah.
they
Yeah.
also have a balance sheet to get them out of jail, really, because that if in doubt, then you just buy, you know, one of the new players.
Yeah, look, the reality is that the amount of time it's going to take for these big guys to dwindle and collapse is probably in the order of a decade or two, right? There's going to be a lot of consolidation in the market. We've already seen significant consolidation in Europe and the US. You know, the US has consolidated half of the industry in the last 20 years. You know, so it is a continuous process that's happening, but I do think there's going to be sort of that stark element. And how many of the current incumbents have deep enough pockets to make enough of a digital transition or transformation to be relevant in this new banking world? That's sort of really the question we're saying. And, you know, I think JP Morgan could make it. But I'm not sure about, say, a HSBC. You know, look at HSBC today, 38 million customers. Revolut just passed 40 million, right? I mean, that's, if you're going to ask which bank is going to be bigger in 10 years' time in Europe, HSBC or Revolut, who are you going to say?
But is that based on numbers of customers or amount of profit and cash in the hand?
Yeah, but so the profit, here's the thing, the profit and cash in hand, they are not going to help you to transition to this new state of
No, it
banking.
might not.
Your asset,
But
your
they will be
asset
bigger.
size, your return, you know, all of those traditional metrics, unless you are digital at heart, unless that is your, you know, the persona of the business, you know, and it's from the ground up, your mission is digital, then whether you're a wholesale bank, you know, being a manufacturer, or whether you're in the retail and commercial banking space, it really doesn't matter. It's all still going to be about your ability to integrate technically.
Yeah, I mean, I guess on the bad side of things, banks have already started to acquire new platforms to do that, rather than, if you take NatWest Box, they bought Vodeno as a new microservices based architecture platform. We've already seen, other people on Vodeno's platform via Ion Bank, innovate in financial services
Yep.
through embedded finance. So I think, there's always the option of buying somebody, right?
Yeah, and look, JPMorgan Chase has acquired 40 fintech companies
Yeah,
since COVID, right?
yeah.
They have partnerships with over 1,600 fintechs right now.
Wow.
So I mean, most people wouldn't believe there are 1,600 fintechs in the world, but there's probably at this point probably about something like 70 to 80,000 fintech companies globally. So, but still, that's impressive.
It is
What they're doing.
impressive, but I mean, they're still a big multi siloed organization where things
Yeah.
take time. And I think this, but it is impressive. I think what their attitude to the fintech community is good.
All right. Well, I think, guys, let's take a quick break for our listeners, and then when we get back, let's start talking about. Let's go a bit more futurist. Let's talk about the next few years in terms of who could be the interesting players. And I'd really like to talk about how you would envisage the AI experience in banking for, an individual as well. Sound all right?
Yeah, sounds
Fantastic.
good.
All right. So you're listening to this mashup podcast between Breaking Banks, and
Dave and Dharm Demystify.
we'll be back in a moment.
Welcome back, and it's Breaking Banks and Dave and Dharm Demystify. So before the break, we were talking about AI, and I think what we want to do is push that conversation forward into, what does banking in the future, perhaps not even the distant future, look like with sort of AI as the kind of key tenant to it. So, Dharm, I know you've done some thinking around this, and even done a video, haven't you?
Yeah, I did a video quite some time ago, and it was really kind of portraying what I guess what embedded finance feels like. It's that you don't notice the transactions going on in the background. It's much more about your foreground experience. So, for example, there's a girl talking to her AI, and in one of the opening scenes, the AI is giving her some advice, and she says, "So where have all the banks gone?" And the AI says, "I am your bank. I just don't I just don't do transactions anymore. I help you with the rest of your life journeys."
Yeah.
And that sets the scene for the 3 or 4 mini scenes that we had after it. One of them was another girl walking down the park. She sees a dog. She wants to buy a dog. I'm thinking of buying a dog. Speaks to the AI, and they said, well, the AI says, well, look, it will cost you extra because you'll have to buy the dog insurance, you'll have to get the the healthcare, blah blah blah, right? But you could manage it if you do these things. So the idea was that it was very much like we're seeing today with generative AI. And by the way, these videos were like almost a decade ago, but it was very much the idea that most financial decisions aren't just like a single point transaction. It's like there's a whole load of other thinking that goes around it that helps you to get to a decision point. And most likely these key decision points is something that you don't just want to make on your own. You actually do want to discuss, right? And that's really where the talking AI came from. It wasn't a Gen AI kind of rip-off type thing. But that's really how I see it, is that much more of it's blended into your lifestyle, and that a premise there is that AIs learn how to interact with each other. So, we still have, application specific AI, but we now have AIs that bridge the gap between, well, okay, I need to get to my AI that understands my home. I need to get to the AI that understands my bank account, and then the AI that understands my lifestyle before I can work out whether I should do a home improvement or go on a better holiday.
Sure. Yeah, I think that makes sense. I laugh sometimes at the way Hollywood depicts banking in the future. They're not very creative in that, So I don't know if you, what was the show with Schwarzenegger on Mars? Total Recall, right? Yeah.
Total Recall, yeah, that's
and
right.
they remade it with Colin Farrell. And in it, at some point, he gets this, he finds this safety deposit box number in a bank. So he goes into the bank, and inside his box is paper money with Obama's head on it, and for a British currency, which is crazy. But anyway, and and paper passports, right? And it's like, yeah, like this is supposed to be in the mid 2040s or something like that. It's like, no way we're going to be still using cash. No way we're going to be using physical passports. That's all going to be digitized. So I do sort of laugh at that, and when we have the debate today, about cashlessness, for example, or keeping branches open for those socially impacted, particularly in places like Britain, in Australia, Canada. This debate rages on all the time, and it's like, in 20 years, no one will think about banking that way, right? It'll just be a function integrated into your life. You won't even, if I ask you, if I ask my grandkids in 20 years, what is a bank, they won't really understand the question.
But I think it's already happening. Like I like we held banks in such high regard. Like if I asked my kids, like when we were younger, you'd sort of look at your Barclays or your HSBC, and there would be some degree of reverence there because they were everywhere. Like their presence was felt. Like we met in Hong Kong, you couldn't move a bank branch on every corner.
Yeah.
Now those things have disappeared. Like the interface to the bank is increasingly Apple, Android, and people aren't sort of going to their apps. They don't hold these banks in the same reverence. So
no,
I think
it's just functional utility.
It's just function utility. So
yeah,
and I think that is a massive change, sort of psychologically. So people are kind of there already. So I mean, I completely agree. Like, we'll live in a cashless society. I think the whole notion of bank, like we've been talking about, will have just kind of changed. So if the interface to your finance is a agent, and the agent is whatever you want it to be, that's almost your bank, isn't it? Because all they're doing is facilitating all the other bits and pieces, which kind of comes behind. So the UX of banking it's almost an irrelevance now. The UX needs to be that sort of AI interface, or increasingly being thought about as that AI interface. And like what Dharmesh says is, like, increasingly finance is going to become more and more embedded, more and more invisible. So you'll talk about it with your AI, or whatever it is, and things will just sort of happen, and often they'll happen on your behalf. So yeah, I mean, it's interesting because one of the things that Dharm and I had a chat with somebody who heads up a team looking at AI for a very data intensive company, like one of the world's most data intensive companies, but he's also looking at quantum as well. And this sort of going back to the speed of a decade for these things to happen, what you kind of see is that quantum and AI, although they're not related directly, they're sort of like AI is helping to develop quantum, and quantum can sort of speed up AI as well. So that sort of vision of the future, once kind of quantum gets there into a state, and we could talk about Q Day as well, because that sounds very, very terrifying. But once quantum gets there, then this whole world of kind of AI agents really has the potential to kind of change everything.
Yeah, absolutely. No, not only in sort of functional areas you're talking about, but new application, new sciences, new understandings of the universe, unlocking cancer treatments and all this sort of stuff. It's just new compounds like longevity. I could go on and on.
Here's the thing: if like quantum, apparently is very good at optimizing portfolios. So if a algorithm can optimize your portfolio, and then it underlines, it sort of optimizes all the bits which sort of sit underneath it, you end up going, well, surely this sort of means that the whole investments just sort of cease to be relevant going forward. So if investments cease to be relevant, then you've kind of got the whole unwinding of the financial system. So this is
all right. So let's talk. We can go there, but let me talk about Q Day first, and then let's go there. Right.
Yeah.
But so Q Day is or Quantum Day in its long form is the time at which a error correcting quantum computer will be able to unlock or undermine existing RSA encryption, right, which powers most of our online security systems that we have and other encryption technologies, right? So essentially a supercomputer that can sort of crack any current encryption. And we are, according to the CEO of IBM that I met at Leap, which I wish I'd been able to record the conversation, but he wasn't willing to record it. But he said 5 to 7 years before IBM has a 100,000 qubit error correcting quantum computer, which is what we're talking about. So 5 to 7 years before you have a quantum computer that can break all existing encryption. Now, if you are listening to this and you have your doubts, and you may have heard me talk about this already, so if you have, I apologize. But if you have your doubts that this is really going to be that bad, let me give you a data point. In August of 2022, the US Air Force sent up an F-22 to shoot down a Chinese weather balloon in over Alaska. You guys remember that?
Yeah.
What was the Chinese weather balloon doing? It was collecting signals intelligence, encrypted military and government signals intelligence, both on the internet and on radio, and it was capturing that. Now, the Chinese government cannot decrypt all of those communications today. With quantum, they can. And that's the only reason that they were collecting that data. And last year, the Chinese government spent $19 billion on their quantum efforts. So if this is how state actors are thinking about quantum, that these opportunities exist, then you need a post-quantum strategy, which is you need security that's going to be able to protect you from other quantum computers. This is what we call polymorphic, encryption, and or post-quantum encryption, if you want a broader class, because there's other protocols. But the U.S. government, the U.S. military is spending about $1 trillion on post-quantum encryption. Both Microsoft and Apple have very big post-quantum practices. So we must assume that, these big cloud providers and so forth will integrate quantum security into the cloud. And so if you're in the cloud, you're probably just going to be able to plug in quantum encryption when it's available, and you're going to be safe. But no existing bank will be safe.
I think the scary thing for me is that people can harvest data today and have been harvesting data today, and it's all encrypted. They can't read it. But on Q Day, they'll be able to read everything from the past, and all of the past will be decrypted.
Yes.
Right. And you don't necessarily need to set up a weather balloon.
Government communications between heads of states.
I think when
radical transparency. That's going to be the result.
Yeah, it's going to be like the Panama Papers on steroids, isn't it?
Yeah.
But it then speaks to, actually, you need a pre-Q Day strategy as well. So, what are you saying now that you wouldn't want people to find out in 10 years? Like,
or put everything on the cloud, right? That's essentially, I think, your only protection is if you're in the cloud, you're going to get access to the new encryption technologies, and your previous data would be encrypted by that new tech. So any bank that's not on the cloud, or any telecoms company that's not on the cloud, is going to have to develop a pretty strong strategy on this front. Hospitals, look at the ransomware attacks we've had on hospitals, right?
Yeah.
Imagine that with Q Day.
So do you think there's going to be an industry which is created around it? It's like the conversation we had this week, it was like Y2K. There's going to be a Q day sort of strategy that
Yeah,
companies.
It would
that
have
makes
to be.
sense. That makes
Yeah,
sense.
and Christ.
Like the back in the the Y2K days,
Yeah,
you know.
yeah,
But
yeah. And you know,
this is
the
a lot
reason
realer.
planes,
Yeah, this
but
is
the
a lot
reason
more real, I
planes
think.
didn't fall out of the sky on
Yeah,
Y2K day is
yeah,
because
we were successful at that. Yeah,
yeah, yeah, yeah, yeah. So it's kind of interesting and fascinating, quite scary, because you know, I guess if the wrong actors sort of got the
Get there first.
information, yeah,
yeah.
they sort of crack the sort of quantum computer, then bloody hell, you know, what could happen?
I've got a different well, not different question, another question. What comes first, singularity or Q day?
Q day. Yeah.
You think?
Yeah, it's because I think we're going to need quantum to get to the last piece of singularity. So, you know, the really truly super intelligent stuff is, you know, at this stage, what we're learning about AI, and obviously this is up for debate, but if you listen to Jan LeCun and Jeffrey Hinton and so forth, the biggest ability that AI is showing us right now, yes, pattern recognition, but it's compression of intelligence, right? That's the massive advantage that AI have, that they can compress intelligence. But there's not, you know, it's not new intelligence necessarily that's emerging from that. It's more efficient intelligence, and eventually, you know, that'll be more efficient at problem solving, and you know, and communicating and all those other things than humans from our cognitive capacity. But in terms of coming up with massively new concepts and you know, like new scientific breakthroughs and things like that, we're going to have to rely more on quantum. So if you want in the singularity, where it's not just technology is on that exponential curve, but intelligence is on that exponential curve, you also need broader consciousness, and that's where I think quantum comes in.
Because I think Kurzweil predicts that it's going to happen sooner than he said before, which is before
Yeah.
2030. It's going to happen. So literally in the next.
Well, I mean, I think well, it depends. I think he, you know, in the last conversation I saw him talking about it, I think he was more specifically talking about AGI happening before 2030. I still think his predictions for the singularity are out in like late 2030s, but I'm happy to, I'll go and check that after our conversation.
So I think we've got a few minutes remaining. So I was Brett, you and I, we were lucky because we met in Brooksy's office and we talked about
2004.
2004. We talked about this thing called the internet and experience and how it would change HSBC. And, you know, largely we've seen that change happen in the last 20 years. Imagine you and I are sat in Brooksy's office right now. What are the things we're telling him that he really needs to get on top of? So it sounds like AI is one of them. And, you know,
Quantum.
would we be saying like quantum's the other one?
Yeah.
Or
You have to move the entire operation on the cloud. You can have an integration to the core system still, but all of your customer facing, all of your integrating tech has got to be on the cloud, right? Because that will provide you security and the flexibility to deploy AI for better integration. You know, you
Right.
can't integrate AI with on-prem solutions, right?
Yeah. I
Yeah.
just qualify that because some banks think putting all their old software in a container and then running it on the cloud is moving to the cloud. That's not what you're talking about. You
No, I'm not
mean
talking about
writing
Kubernetes
specific
containerization. I'm talking about all of
microservices.
your key infrastructure that allows integration. Now, it can be a hybrid cloud. You can have public, private, but ultimately, if you want to use AI for greater capability for the bank, and you know, that's going to have to be the infrastructure play, right? And for that, you are going to have to be in the cloud. How can you be technology-based infrastructure on-prem? You know, just you know, for other organizations, you know, they have to come to your building to operate their app. No, you know, you know. So that would be that's the no-brainer. And also the other
everything
thing that I've
onto the
been saying
cloud.
for, sorry.
So everything onto the cloud.
Yeah,
Is
and then the
Cloud,
other thing,
AI, and quantum. 3.
yeah, and the other thing that I've been saying for 10 years is you have to have every single product and experience that you have optimized for digital first. right? If you need a signature on a piece of paper for any of your products or services, you're already out of business. You just don't know it.
That makes a lot of sense.
Do you, I mean, one thing that I worry about is if we look at some of the recent outages that we've had, is that we do we need to have a manual back stop, as in if shit hits the fan and we have to go, full, the film Transcendence.
Yeah,
And
no, I
that
understand that.
of the
So
community.
I mean, I think there may be, emerging barter economies and things like that, particularly with, high surveillance societies and
Yeah,
things. However, having said that, you are going to have to be a part of the digital economy to survive in the future. Access to the best healthcare is going to be digital. Access to the best education is going to be digital, right? Access to the best personal, AI, it's all going to be based on that. So that's the directionality. And we are just going to make, we're already looking at, retail CBDC that can work offline and so forth. We are looking at infrastructure that will be able to survive under outages. But then again, at the same time, if the whole world is going smart, then you're just not going to have outages, Dharmesh. That's not a
yeah,
reasonable position. How often does your electricity fail in your house? What, maybe once a year, where the power goes off for a bit. So it's not, yes, we have to make infrastructure more robust, but I don't think it's realistic to say, yeah, we could have massive cyber attacks, and that could be a reason for outages, and that is a weakness, but it's not a weakness just in banking or transactions. It's a
yeah.
weakness in utility companies, electricity and stuff. We could have got into that with Q-Day as well. 90% of the top 20 electricity companies had major hacks last year.
Yeah. No, it's amazing.
Can I ask one final question? If
Sure.
you had to choose one film that predicts the future accurately, which one would you choose?
I ask this same question of my guests when I do the Futurist podcast. It's like, which version of science fiction best represents the future you hope for, right? And I would say, I would say Star Trek most likely, not the militarized version of Star Trek, but the exploration type, Star Trek, the expanding human knowledge type, and the fact that all of a society is built towards this pursuit of advancement as a species, and I think that's. But if I look at it from a not that's from media, but from a book perspective, I would probably say Ian Banks' Culture series is what I would see. I see sort of different classes of human based on integration of technology. So culture, really you've got the Homo Deus, the advanced humans that have all this tech integrated into their body, can control down to the molecular level and things like that. That sort of stuff I think is probably possible, but I think we might have a fork in humanity, with people, some people saying natural humans and others becoming cyborgified.
Yeah.
Dave.
We could have a whole
No,
show on this.
I love the culture books a lot, primarily because the AIs are all called random names. So
Yes.
but no, I think
Just
it's
read the instructions, the Starship. That's
yeah.
what Elon named
Well,
his
and
thing after.
meet Effa and all the other things. So yeah, look, I think they do. I mean, I think sadly Black Mirror is so spot on in terms of what it predicts in the future that it's become almost like a documentary. So
Yeah, I mean, there's a bit of truth to that, but like I think we, this moment in history, I mean, we're very privileged to be witnessing it, but the integration of artificial intelligence and these technologies to take humanity to the next level, the biggest thing that I think is going to change everything is the philosophy of what it means to be a human is going to radically change with these technical capabilities. That's what the singularity will really do. The singularity will change what it means to be a human. It'll change what our change, our very understanding of consciousness. I mean, we are about to take it to the next level, but there's a lot of people that don't want that, and they want to stay in the past. And so the transition is going to be messy.
No,
Sure.
definitely.
My
Very
answer is
good.
none of this matters. None of it matters because none of it is real. We're already in the matrix.
Yes. Well, what does Elon say? There's about a 1 in a billion chance that this is base reality. So
Yeah.
we'll leave you with that thought. Thanks for listening to Breaking Banks this week. Don't forget, and of course, Dave and Dharmesh Demystified. If you want to check out some of our other episodes, you can find us wherever good podcasts are sold or presented. So Spotify, iTunes, Stitcher, et cetera, et cetera. Dave and Dharmesh, where can people follow you for your stream of consciousness?
Thank you.
So again, on all the good podcast platforms, we actually are hosted by Fintech Futures as well. So
Great.
people head to the Fintech Futures website. They will find our back catalogue of podcasts there.
Fantastic. Well,
Thank you for having us,
that's
Brett.
so yeah, it's great. It's great for us to do this mashup. Let's see how it goes.
I think we were going to have a lively debate, but it sounds like we agree on many things, and and it's always been that way, Brett. So
Yeah, it has, brother. All right, thanks, guys, and we will see you on the next episode of our respective podcasts. Thanks for joining us this week.